Is inflation a quiet form of theft? Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? More importantly, what can we do about it? How can investments in scarce assets like gold and silver or decentralized assets like Bitcoin be used to counterbalance this constant erosion of our savings and purchasing power? If you think you may be falling behind, see the link in the video description to access the free Inflation Retirement Calculator to make sure that you are on track. To discuss why gold works, why fiat currencies ultimately fail, and why gold and other scarce assets act as an insurance policy against risk, we will hear from economist and expert Mike Maloney, author and economist at George Mason University, Lawrence H. White, economist, White House advisor, and author Jim Rickards, economist and investor Keith Weiner.
1 ounce of gold is a pretty big chunk of money. You could buy, maybe not a decent used car, but you could buy a used car with 1 ounce of gold. You could buy quite a year's worth of groceries, but certainly several months worth of groceries. And it's always been like that. The key for me is that you have the right to redeem for your gold if you want it. That was the probably most significant change. In 1933, we went from you could hand in your $20 bill and get 1 ounce of gold to no longer is it possible to redeem that paper. Now the paper becomes irredeemable, meaning it's a promise to pay that is dishonored and promises not to pay. So it becomes a contradiction and then a meaningless unit. I mean, what is the dollar worth? Go to your local McDonald's today and find out what they think it's worth. And what will they think it's worth tomorrow might be a different worth than it is today. So it's important that people have the right to redeem, which is what keeps the banking system honest. Most people won't redeem most of the time until a bank begins to cheat. The moment that bank begins to cheat, then they're going to find that redemptions are outnumbering deposits, and that will force them back into line. And that's a good thing.
Well, gold is money, and money's not supposed to have a cash flow. So take, reach in your wallet or your purse and pull out a dollar bill and hold it up with two hands and look at it. Does it have yield? No. But when you have money, at least a sound form of money, you don't have any risk. And so the idea that gold has no yield, well, that's literally true, but it's not supposed to have a yield because it's money. Now, you say, well, I can get yield on my dollars by putting them in the bank. That's true. And people think of it as money, but that's not money anymore. When you put your dollar in a bank, it's not money. It's a bank deposit, which is an unsecured liability of banks that as recently as 2008 and even later were completely insolvent. Now, yes, they were bailed out by the federal government. There's FDIC insurance, and I understand that. But even if you're under the insured limit, how do you know the insurance deposit insurance corporation itself is solvent? That's not always true. How do you know that bank withdrawals won't be suspended or reduced as they were in Greece and Cyprus? And then people say, well, that would never happen in the United States. And I point out it did happen in the United States in 1933. There was an 8-day bank holiday. Banks were, by executive order of the President of the United States, banks were shut. The government did not say when they would reopen. Turned out they reopened 8 days later, but for 8 days you couldn't go down to the bank and get your money. People say, oh, I've got money in money market funds. Another misnomer or oxymoron, because the SEC recently issued a rule saying that money market funds can suspend redemption. So everyday Americans think that they can call up their broker, sell their money market fund units, the money will be wired to their account and will be available to them the next day. Well, that's a nice, warm, cozy assumption, but none of those assumptions are necessarily true. First of all, money market funds were in the process of becoming illiquid in 2008, and the government stepped in to bail them out. Today, they're allowed to suspend redemptions just like a hedge fund, so they don't have to give you your money. And again, people say none of these things will happen, and I just point out they have all happened. So I don't recommend taking all your money out of the bank or selling all your stocks or cashing in everything and buying 100% gold. What I recommend is about 10% gold, 10% of your investable assets. Take about 10%, get gold. That's your insurance policies.
Just a quick interruption to say thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Also, a quick mention and shout out to one of our sponsors, Birch Gold Group. With over 3 decades in the industry, Birch Gold Group is one of the most trusted companies for gold investing. Whether you are starting a brand new gold IRA or rolling over an existing account, the company will make this process seamless and stress-free. With endorsements from respected and renowned voices across America and one of the lowest investment minimums in the gold IRA industry, Birch Gold Group makes it easy to get started investing in precious metals. To find out more about Birch Gold Group and how this trusted gold investment company can help safeguard your coveted retirement savings, see the link in the video description to visit Birch Gold's official site to receive a free gold investing guide. Also, check out our video review of Birch Gold Group by clicking the link in the top right. Now, back to the episode.
I think in general there is not a deflation problem from having a fixed money supply, because then you have deflation when output grows. So you have same number of units of money chasing more goods, the price per good goes down. That's fine. That's how people enjoy a higher standard of living, by prices falling. And if you look at the history of the gold standard, there were periods in which that's an approximation to what happened. Prices were falling because output was growing faster than the supply of gold. That doesn't create any big problems. It doesn't create negative interest rates or trouble like that.
Before World War I, each note that a Treasury issued would say that there have been deposited with the United States Treasury $20 in gold coin payable to the bearer upon demand. The money was in the vault. The currency was a note they gave you that was a claim check, only a claim check on the money. The same as if you go to the dry cleaners and you give them your shirt and they give you a claim check for your shirt. The value is that shirt at the dry cleaners, not the piece of paper that says that you own that shirt.
I would say don't sleep on gold. Just as gold today, having been demonetized, has a more volatile purchasing power than it did when it was a commonly accepted medium of exchange. But gold has the additional advantage of a long-run response in the supply, which stabilizes the purchasing power, and people anticipating that know that the purchasing power is not going to move too far. If the price goes up, they know that it's going to come back down, and that helps it come back down sooner.
The 5,000-year history, gold is the one asset that has outlasted numerous business cycles, economic downturns, booms and busts, stock market bubbles, and the rise and fall of every currency. And unlike depreciating faith-based fiat currency, gold is no one's liability. It builds wealth while preserving it. Owning physical gold and precious metals requires responsible sourcing of grades, purity, condition, the best prices, transparency, and most of all, security and storage. Gold IRAs are a tax-deferred means of owning physical gold and ensuring all these investing principles are met. We have reviewed and vetted the best gold IRA companies that meet all these requirements. See the link in the video description to access the free gold investment guides. If you enjoyed this video content, be sure to like and subscribe so you don't miss our next video. If you have $100K of retirement savings to protect and want to take advantage of the best gold prices, see the link in the video description to sign up for the free Gold and Silver Web Conference hosted by Augusta Precious Metals. Thank you for watching.